Hi class, this is your instructor, Mrs. Kolerick, and we're going to talk about Chapter 6, Closing Entries today. So what I've got here is a sheet full of T accounts, and you'll see I've got the owner's equity section here, the revenue section here, and then the expense section. And basically, at the end of the year, you prepare some closing entries to close out all your temporary accounts. And your temporary accounts include the drawing account, the revenue accounts, and the expense accounts. And what we've done so far is we're sitting at the end of the year, we've prepared our worksheet, we've prepared our financial statements, and now before we start the new year, we're going to transfer the amounts that are in the drawing, revenues, and expense accounts into the capital account so that we're ready to start the new year. Now, we have a new account called Income Summary, and it's just a temporary owner's equity account that's used only in the closing process to summarize the results of operations. It's sort of a little clearinghouse account. So we're going to be using that. There are 4 steps in the closing process, and when you do each of the 4 steps, it'll zero out all your revenue expense accounts and your drawing account in order to get them ready to begin the new accounting cycle. So I'm going to scroll up here. I'm just going to write down the steps in the process. The first step is to transfer the balance of the revenue account into Income Summary. Alright, so with that, I come down here and I see my revenue account has a credit balance of $47,000. If I want to zero that out, what am I going to have to do to that account to get it to be a balance of 0? I'm going to have to debit it for $47,000. So I'm going to debit the fees income account, $47,000. Now because I'm debiting fees income, I have to credit something, and for these first 2 steps we're going to use the Income Summary account to help us. So since I debited fees income for $47,000, I'm going to debit income summary for credit income summary for $47,000. Excuse me. So I have a debit to fees income, a credit to income summary. That's my first step. Close out my revenue accounts to the Income Summary account. And so what I'm going to do here is just I've got a page that I'm going to use as my general journal. For my first transaction at the end of the year, I'm going to debit fees income for $47,000. And I'm going to credit Income Summary for $47,000. That's my first transaction, my first closing entry. I'll get ready for my next one here. Okay, the second step is to transfer all the expense account balances into the Income Summary account. So let me just write that down here. It's not working here. There we go. Okay, so that's our second step. So let's go down here to our T accounts. Each one of these expense accounts has a debit balance. So I need to credit each of the expense accounts for the total in each account. I'm going to credit utilities expense $650. I'm going to credit supplies expense $500. I'm going to credit rent expense for $4,000. And I'm going to credit depreciation expense for $183. Now those are my credits. So I have to debit something, and I'm going to use the Income Summary account again. And I'm going to debit the Income Summary for the total of all those expense accounts. And so if I add up all these amounts, I'm going to debit Income Summary for $13,333. All right, so that's what my transaction looks like. I'm going to go down here And for my second closing entry, I'm going to debit income summary. $13,333, and I'm going to credit salaries expense for $8,000. I'm going to credit utilities expense for $650. I'm going to credit supplies expense for $500. I'm going to credit rent expense for $4,000. And I'm going to credit depreciation expense on the equipment for $183. So that's what my second closing entry looks like. Okay, the third step, I'm going to go up here and write it down. Third step is to transfer the balance of income summary to the owner's capital account. All right, so I look back down here. What I have to do is figure out what is the balance in income summary. I've got a $13,333 debit and a $47,000 credit. So I subtract the two numbers, and the larger size is the credit side. So I have a $33,667 balance in income summary. So in order to close this account, I actually need to debit it for $33,667. Okay? So I'm going to close out the income summary account into the owner's capital account. To close this account, I had to debit income summary. So to credit, I'm going to go over here to the capital account and credit the capital account, $33,667. All right, so that's my third closing entry. I'm going to go down here. I'm going to debit income summary for $33,667, and I'm going to credit Carolyn Wells Capital, $33,667. That's my third closing entry. It closes the income summary account into the capital account, which in effect is really just transferring your revenues and expenses into the capital. So that'll zero out. That's my third step. Now my last step in the closing process is to transfer the balance of the drawing account into the owner's capital account. So that's my last step. So I'm going to go down here to my T accounts and take a look at that. To close the drawing, I'm going to have to credit it for $5,000. And if I credit the drawing, I have to debit something. I'm closing the drawing into capital, so I'm going to go up here and debit the capital account for $5,000. So that's my last adjustment. I'm going to debit capital and credit drawing. So I go down here. And record in my general journal a debit to Carolyn Wells Capital for $5,000 and a credit to Carolyn Wells Drawing for $5,000. Okay, those are my 4 closing entries. And generally in my general journal, I'll just make a little section called closing entries. And then you don't have to put a description for each of the 4 closing entries. And then I'll post those into my general ledger accounts, and I'm ready to start the new year. Because if you look here, fees income is completely zeroed out. Each expense account will have a 0 balance. The income summary will have a 0 balance, and the drawing account will have a 0 balance. So the balance that capital has $100,000 plus $33,000 minus $5,000 would be 100 and what is it? 33, 20, 128,667. That's the new balance. 128. Sorry. That's the new balance to start the new year, and we're ready to go. All right. That's the highlight out of chapter 6. So that's it. Bye.